Peter Eliades with you. Stock Market Cycles update for Thursday, May 28th. We're going to step back a few steps today because there's not too much going on short term, but the important thing to look at is some of the intermediate term projections. I won't call them longer term ones, and to put them in perspective. These are 5-week offsets. On the daily chart, they range from 24.2 to 27.6 days. This is the web chart, which was so nicely devised by our programming wizard, Stefan Schurman. Stefan's living in Bulgaria now. When I first met him a year and a half ago, he was in Switzerland. A young man of German ancestry and one hell of a programmer. Look at this. Isn't this beautiful? This is a thing of beauty. Look at it. Okay, let's look at this a little bit. First of all, be aware that this 5-week offset, and again, the gray area is what I call a continuum. This has nothing to do with the original Hurst work. I shouldn't say has nothing to do with it. Has a lot to do with it, but it's the Peter Eliades derivative of the Hurst work. And it's worked very nicely. Thank you very much. By the way, we shouldn't go through one of these updates without telling you that the projection software is available to you now. It's available at TradeStation. If you take the program along with the TradeStation platform, if it's a new account, you'll get a $1,000 rebate in terms of commission. So that's a pretty good deal if you're interested. I should also tell you that probably it's going to be a few months now before we have it on our own website. But sometime over the next 2 or 3 weeks, we're going to be transitioning these videos that we're doing to our own website, and they will no longer be free videos. And within the next several months, hopefully, this software will be available on the website. You will not have to be a TradeStation subscriber, but for those of you that are really into the markets, whether it be analysis-wise or trading, it's not a bad deal if you think about the TradeStation deal. Okay, enough advertising. Let's step back and look at the market. This is a daily chart of the S&P. As I told you, 24.2 to 27.6 offsets. And this, what I call the continuum, is the space in between those offsets. So in order to confirm any kind of projection, you have to get above the continuum on an upside projection and below it on a downside projection, okay? So let's take a look at some of the things that have occurred here. First of all, I want to call your attention to the latest one, obviously, and that is a projection up to between 2485.12 and 2606.27. That's on the S&P cash, and that is brought about by the move above the continuum here. That's figuring out where it crossed at the highest and where it crossed at the lowest point. That gives you the projection. So it is a nominal 10-week projection because they're 5-week offsets. And the reason I bring that up now is I want you to go all the way back. This is the Christmas low back here in 2018. And look what happened. We got an upside projection, the same offset as the current one, but the projection came in January of, right at the end of January of 2019, January 24th, and you didn't reach that projection until right in here. That was April 3rd of 2019. So you're talking about over 2 months later. 2 months and a week or two later is when you finally reach that upside projection. It's not a short-term projection. So you should be looking at possibly the same thing here. They're not going to match up exactly, probably, in terms of where the projection is met, if indeed it is met. But just to give you an idea that these things unwind over time. This is not a 10-day projection. So the projection was given, confirmed, right around April 19, 20, right in that time period, okay? So towards the late middle part of April, going into the later part of April. So go forward a couple of months from there, May, June, late June going into July would be the same type of thing as you see here, okay? So is that a prediction as to when it's going to happen? No, and I should probably make clear at this point that the original Hurst theory did indeed give you time elements as to theoretically when projections were due and overdue. I do very little of that in terms of the time element because I found with decades of experience, I'm not talking about weeks or months or even a few years of experience, but decades of experience, that the time element is nowhere near as accurate or as fundamental in terms of the analysis. I hate to use those two words together, fundamental analysis, but it's not anywhere nearly as accurate as the price projections are. So I just use the price projections. Now, this is a long way up from current levels. Are we going to do that? We're not going to go up there in a few days or a week, most likely. But this projection remains very much in effect unless and until what? Everybody together. You go below the offsets. Okay, now we're in a position now where it's no big deal if you move below the offsets. The projection was given back down here around 2,800. If you go below the offsets now, it's going to occur probably somewhere around 2,900 or higher. So all you've lost in the meantime, if you took some kind of position, based it on this upside projection, was a bit of time, and you gained 100 points on the upside while you were waiting. I'm not saying it's going to be invalidated. I'm saying only two things can happen from here. Either the projections are met or they're invalidated. So I wanted to take this step back and look at what we're looking at for the longer term, okay? So let's take a look at a couple of other offsets now that we have this chart up, however. And for that, we have to go back to our regular chart right here. Okay, so if we go here and we go to a 48.4 to 55.3, I mean, this one is off the chart. Do you believe this? Okay, here is the nominal 20-week projection given by 10-week offsets. You saw what these offsets were, 48.4 to 55.3, okay? And the projection calls for 35.90 plus or minus 10%. 10% of the total move from this low on March 23rd to the projected high, okay? And that gives you final projections of 35.03 and change to 37.94, rounded off, okay? So, again, this is not saying you get up there in the next week or two. If you give it just kind of a general flow in terms of the rate of ascent, you're probably talking, unless it accelerates its ascent, you're probably talking in a straight line going something like this going into the July time period. Early July, maybe even mid-July. So, and you have all this area in here where you can play games and go down and come up and down and up and whatever. But the bottom line is we have this projection. It has been given, okay? Now let's look at some of the shorter term projections. Remember we showed you this 3.5 to 4 day offset several days ago. And at the time we told you that we had not met the projection and we thought we'd do it in pretty quick fashion. That was right in around here. And we had not reached the projection. We came down and tested the offset lines. That happens. And a lot of times, I don't know if we've said this before, but it's something that should be apparent to you in watching. A lot of times, the offset lines act as support for price. That's exactly what they did here. Then you came up and met the projection, okay? So, in fact, you can see it's exceeded by a little bit. Let's see if there's another projection that gives us the current levels. This is 7 to 8 day offsets for nominal 20-day projections. They've been met and exceeded. Let's go to the next longer offset, 12.1 to 13.8. That's 2.5 weeks. Nominal 5-week projection, bingo. Here you go. Here's the projection window, 29.99 and change, 3,100.38. So as you can see, we have met some of these shorter term projections. Doesn't mean you can't go a little higher. In fact, I think that if we do this same projection, let's put it on with a Dow. I believe on the Dow, it's still fallen a little bit short. Okay, here is the Dow, and as you can see, this is a nominal 5-week projection. Offsets are 12.1, 13.8, and they call for 25,829 rounded off, 26,145. So on the Dow, I mean, it came really close today. The high today was 25,759 rounded off. So you say, well, that's still 60 points away. Well, 60 points at a price of 25,000 is not a lot of points, folks. You're talking about, 3/4% Anyway, we came real close today, as you can see. But we are in the area of some of these short-term projections that have been satisfied. We have this little trend line drawn in here, 1, 2, 3-pointed trend line. That comes in right in around the projection window. So for those of you that are chartists, you might put this trend line in there. It goes from the high of April 9th through the high of April 29th. And this is where it comes in presently, right into the area of the projection zone. That's where we stand. I don't want to get too fancy. No more very short-term things. You can see what the larger picture is here. It's calling for higher prices, if not significantly higher prices. And the only way we'll change our mind is if those projections get invalidated. Now, mind you, you could start to get a clue that they might get invalidated if you start to get shorter-term downside projections that will lead into that territory. So you don't just stand around like a fool and say, no, I know those much higher ones will be met, and I'll wait. I know it's a few hundred S&P points down, but I'll wait till we go down there and move below the price to see. No, that's not necessary. That's why we go through the sequence of projections, okay? That's where we stand. If you don't have the software, get the software. You will be excited. For those of you that have the software, please, you're allowed to comment here on the YouTube videos. Let people know if you're enjoying it. I hope you're enjoying it. I hope you're finding it useful, okay? And let people know if indeed that's the case so they can get excited about it too. Thanks a lot for watching. We will talk to you. Let's see, this is Thursday, so tomorrow begins the weekend. Sometime before Monday morning, we will be doing another update for the weekend. Thanks a lot for watching.